Well, we're so glad you chose GoldSeek.com radio as your choice for precious metals information. Today's special guest, Peter Schiff from Euro Pacific Capital. Well, Peter Schiff is CEO of Euro Pacific Precious Metals and author of Classic Gold Scams, How to Avoid Getting Ripped Off. Welcome back, Peter.
Hey, thanks for having me back on.
You know, in your January 2012 gold report, you say that this could be the year that gold tops its inflation-adjusted all-time high of 2,300, that you expect the U.S. dollar rally to fizzle and continue its downtrend.
Yeah, in fact, it already is fizzling. In fact, it's fizzling quite a bit today after Ben Bernanke basically said that 0% interest rates will be here until the end of 2014 rather. So we got an extra year or so of 0% interest rates, although I think it's going to hit the fan before the end of 2014. But that's got gold up $40 today, and it had already gotten off to a good start this year. So we're moving up pretty good. Silver now, up over $1 and a quarter an ounce today, so big moves. And yeah, for those people who are interested in that report on gold scams, there's a website, goldscams.com, and they just go there and they can download it for free. It is a good time to buy gold before the price goes up anymore, but just don't get scammed in the process. So if you're going to buy it, make sure and buy it the right way.
At the FOMC, they're expecting the Fed could hold rates at that ZIRP level till as far as 2015, much further than the summer of 2013, which was their original estimate.
Well, they have to create massive inflation to keep interest rates that low, especially as prices are rising. They will continue to rise. I think we could see record high oil prices this year. This is clearly, a consequence of all this money printing that the Fed has to do to keep buying up the bonds, to keep interest rates low. They're doing this to try to prop up a phony economy, to try to reflate the housing market, to keep the government borrowing so that it doesn't have to default. And it's just reasons to buy more gold and buy more silver. And unfortunately, as long as we pursue these policies, the U.S. economy is never really going to recover, which means we're not going to create productive jobs for our citizens, and Americans' standards of living are going to continue to drop.
In one of your reports, you also say that the percentage of investment funds flowing into the precious metals market is small compared to those chasing U.S. dollars. Under that scenario, from a contrarian perspective, good news for gold and silver investors.
Yeah, and of course, the good news there from a contrarian perspective is that the mainstream media, the vast majority of investors, institutional, individual, still don't own any gold. They're still convinced it's a bubble. We've been going up for 10, 11 years, and they haven't bought their first ounce yet. So I think a spectacular 2012, which is what I'm looking for, may bring some of those naysayers off the sidelines into the market. But I think we're a long way from a blow-off top that you would get towards the end of a bubble. We might eventually get there, but I think we're years away and thousands of dollars an ounce away.
You also point out that the Eurozone does not have the luxury of a centralized bailout facility, such as our Fed, to jumpstart that regional economy. How is this going to affect the euro-dollar battle royale going forward?
Well, central banks, they jumpstart inflation, and Europe doesn't have as big a crutch to lean on as we do, so they might actually be forced to deal with their problems while we can keep papering over ours by creating inflation. But what that means is that our Fed will do more damage to our economy than the ECB will do to the European economy. And so there's more reasons for Americans to own gold because the price of gold as measured in dollars is going to go a lot higher than the price of gold measured in euros.
Mainstream analysts prefer dollar-denominated assets, but you say that unsustainable debt levels must eventually lead to a lower dollar.
The dollar has already been falling. It's not like the decline is off in the future. It is happening. The decline is ongoing. I mean, it does get interrupted briefly. We did have a strengthening dollar for a few months there, but it seems to me that we're back on the downward trend that's really been ongoing for 30, 40 years.
Exactly. The FOMC did not announce QE3 plans, but there's a couple of major investment banks that now are telling their clients expect Fed QE3 to be announced in March of this year. Do you expect that to come to pass, and will that revive the markets?
Well, they're going to do the QE. In fact, I think they're already doing it, whether they announce it as an official policy or just do it unofficially. That's all they got. That's what they're doing. In fact, to keep interest rates at these low levels, 0% throughout 2014, they're going to have to buy a lot of bonds. They're going to have to print a lot of money to buy up all those bonds. That's what quantitative easing is. So it doesn't really matter if they officially state it as a policy or not. They're doing it anyway. I think that they're reluctant to say it because it's an official admission of how bad things are, and they don't want to basically let people know how bad things are. Well, when things get demonstrably worse, when everybody can realize that the economy is back in recession or teetering on the brink, as more of that starts to happen, then it won't be as big enough admission by the Fed. In fact, the Fed will feel it's safe to state the obvious and then give the market exactly what it wants, which is more QE. I mean, right now, if they announce it prematurely, he maybe is afraid that gold will go up $100 or $200 that day, that the dollar will tank. So he's trying to hold off on delivering that kind of stimulus until he absolutely has to. But they're going to do it. There's QE coming, and eventually they're going to announce it, but the Fed will announce it when it thinks it needs to announce it, but not a day earlier.
You say the Eurozone sovereign debt crisis could continue all year long, despite, all this bailout that the IMF has been promoting in the past week or so. And that could provide some interesting buying points for both gold and silver investors throughout the year.
Yeah, I mean, people are nervous about the euro. They look for alternatives. Some of them have been looking towards the dollar. I think today's announcements from the Fed should remind people that the dollar is not an alternative to the euro. It's just as sick, if not sicker. So more and more reasons to buy gold. In fact, I think the best thing the dollar has going for it right now is that it's not the euro. Not that I think that the dollar's in better shape than the euro. It's not. But at least for now, people who are worried about the euro have been buying the dollar without realizing they've jumped from the frying pan into the fire. So, when you hear a lot of politicians trying to blame poor economy on the problems in Europe, those problems in Europe are artificially propping up a very weak U.S. economy because all that money is fleeing the euro and entering the dollar in our treasury market. The government can keep on borrowing to stimulate. We can spend more. Interest rates are lower than they otherwise would be. Consumer prices are lower than they otherwise would be. And, you take away Europe's problems and you magnify our problems.
Peter, for over a year, silver has been backdated on the NYMEX exchange. Copper recently slipped into backwardation as well. Do you expect gold to follow suit? And if so, what are the implications for the markets, sir?
I don't know that that's necessarily going to happen, but I think gold is going up regardless. I mean, it depends on demand and delivery constraints, and, it's certainly possible. But, to me, it doesn't really matter. I mean, I just think gold's going up.
I assume you'd agree with the statement that gold will likely record its 12th winning year in a row this year.
Yeah, I think so. I think the correction that we had in the last quarter of 2011 was pretty much good enough. I think we shook out a lot of the weaker longs. We got a lot of shorts in the market. We built up a lot of negativity. We, created that wall of worry, and I think we'll climb it all year long. At some point, maybe we'll start to see a little bit more optimism. But you look at the gold stocks. If you look at the current price of gold right now, gold is today trading at the highest it's been since early December, right? So it's over a month and a half ago when gold was this high. When gold was this high, the Huey index was over 600. The last time gold was this high, the Huey was over 600. And today it's at 526. You have a big disconnect there. And I think the lack of interest in mining stocks in general shows how much negativity there is, how bad the sentiment is of traders and how they look at the gold market. So that's very bullish, especially today with gold up better than $40.
Well, Peter, for folks who'd like to find out more about your work at Euro Pacific Capital, could you help direct their web browsers and let them know what they'll find?
Sure. Well, I've got two companies here in the U.S. that we work with, Euro Pacific Capital, which is where we can help you buy gold and silver stocks, as well as foreign stocks and foreign currencies. And, you can go to europac.net, EUROPAC.net. My mining company, my precious metals company is Europac Metals, europacmetals.com. Also, you can download the report I mentioned earlier, Gold Scams, at goldscams.com. And, I do daily updates. I have my own radio show now, the Peter Schiff Show. I talk about the precious metals market, politics, economics every day for 2 hours. You can listen live or delayed. Just go to schiffradio.com. The live feed is from 10 a.m. to noon Eastern Time, Monday through Friday, and it loops all day long in case you can't listen live. But if you listen live, you can also call in. We do take calls.
Well, sir, it's always a pleasure hearing your thoughts, and I want to thank you for sharing your time with us today.
Sure, anytime.
Hello and welcome to IB Times TV. Today is Wednesday, January 25th. I'm Jessica Minton, and this is your afternoon gold and silver report. Gold and silver prices shot up today after the Federal Reserve said its policy of easy money will last until late 2014. That's longer than investors had been expecting. The markets had expected the Fed to begin raising interest rates sometime next year. News of the extension in ultra-low interest rates sent gold and silver sharply higher. The price of gold jumped more than $40, a 2.2% gain and the biggest one-day increase so far this year. The other precious metals got a lift from the Fed as well. Silver jumped 3.6%, platinum rose 1.8%, and palladium was up 1.9%. Precious metals also got a boost from the Fed, suggesting that inflation was beginning to rise. Gold is now up 9% on the year and performing far better than the main stock indices and stock commodity indexes like copper and crude oil. Now let's look how gold and silver did in floor trading. Gold for February delivery, the most actively traded contract on the COMEX, jumped $35.60 to $1,700.10 per ounce. Gold for immediate delivery was up $34.40 to $1,702.40. Silver for March delivery, the most actively traded contract, rose $1.15 to $33.12, while spot silver increased $1.20 to $33.20. If you would like more information on precious metals, please be sure to visit ibtimes.com/gold. Thank you for watching. I'm Jessica Minton with IB Times TV.